This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil fell by over 3% on Monday to a one-week low, dropping for a third session after official data showed refining throughput and economic activity slowed in China, an indication that COVID-19 outbreaks are crimping the world's second-largest economy. Brent crude was down $2.21, or 3.1%, at $68.38 a barrel by 13:47 GMT. U.S. oil fell by $2.42, or 3.5%, to $66.02. Chinese factory output and retail sales growth slowed sharply in July, data showed, missing expectations as flooding and fresh outbreaks of COVID-19 disrupted business activity.
OPEC and its allies, including Russia, believe oil markets do not need more oil than they plan to release in the coming months, despite U.S. pressure to add supplies to check an oil price rise, four sources told Reuters. Last week, U.S. President Joe Biden's administration urged OPEC and its allies to boost output to tackle rising gasoline prices it sees as a threat to the global economic recovery. The Organization of the Petroleum Exporting Countries and its allies, known as OPEC+, agreed in July to boost output by 400,000 barrels per day a month starting in August until its current oil output reductions of 5.8 million barrels of oil per day are fully phased out.
Moving on to the top news in the energy sector.
China's daily crude throughput last month fell to the lowest since May 2020 as independent plants slashed production amid a tighter quotas, high inventories and weakening profits. Last month's processing volumes were 59.06 million tons, or 13.9 million barrels per day, BPD, 0.9% below the same month of 2020. Data from the National Bureau of Statistics, NBS, showed on Monday. That was the first year-on-year decline since March last year when coronavirus hammered Chinese fuel demand, and the July level was down 6% from off June's record at 14.8 million barrels of oil per day.
Oil and gas producers in U.S. Gulf of Mexico have consolidated at a faster rate during the pandemic, new government data shows, as crashing prices squeezed out smaller drillers who had been seen as the industry's future. The dominance of the top producers in the Gulf looms large as the industry's technology showcase, the Offshore Technology Conference, officially gets underway in Houston on Monday. The event, which in prior years drew more than 60,000 people and 1,000 of exhibitors, will be smaller this year due to company cutbacks and coronavirus-induced travel restrictions. The pandemic, along with recurring hurricane shut-ins, hastened the demise of some Gulf of Mexico producers.
Next, we have the top news in metal markets.
Record aluminium prices in the United States and Europe will be sustained by Russia's mining tax for some months, but attempts to push prices even higher are likely to face headwinds from traders cashing in their stocks, analysts said. Russia has imposed a 15% tax or a minimum of $254 a ton on aluminium exports between August and December. Rusal, Russia's only aluminium producer, accounted for 6% of global supplies estimated at 65 million tons last year. Consumers purchasing aluminium on the spot physical market pay the benchmark aluminium price on the London Metal Exchange, LME, plus a premium which covers transport and handling costs and taxes.
China's crude steel output fell in July to the lowest monthly level since April 2020 as authorities stepped up production controls designed to meet a target of keeping output unchanged from last year as Beijing bids to cap carbon emissions. The world's top producer made 86.79 million tons of crude steel last month, falling 7.6% from June and 8.4% from 93.36 million tons in July 2020. Data from the National Bureau of Statistics, NBS, showed on Monday. Average daily output stood at 2.8 million tons last month, according to Reuters calculations based on the NBS data, slipping 11% from 3.13 million tons per day in June. We will now look at the top news in the agricultural sector. Russian wheat prices rose sharply last week, tracking price growth in Chicago and Paris on worries over global supply, analysts said on Monday. Concerns were heightened by the U.S. Department of Agriculture's USDA cut to its forecast for the 2021-22 global wheat crop last week, citing poor weather in producers including Russia, the world's largest wheat exporter. Russian wheat with 12.5% protein loading from Black Sea ports for supply in August was $287 a ton free on board FOB at the end of last week, up $20 from the previous week, the IKAR consultancy said in a note.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.